Hi everyone, welcome to the US CPA classes for business analysis and reporting examination. Yes, this is your disciplinary exam and it has a lot of accounting concept, management concept and the data analytics related concept including state and governmental accounting. So in this particular video, I'll be walking you through with the high level overview of chapter 1, that is business analysis, and this chapter would be around 40 to 50% of your examination, right? So particularly the overview of the business analysis and reporting examination, I have 6 videos which are coming back to back here onward. So this is part 1, so stay tuned for 2, 3, 4, 5 and 6 as well to understand the you can say the main topics of the BR which is coming in your exam. So that's the whole idea of today class, and then like from the next class onward we'll jump into the main course section. So let me present my screen and take you through one by one with these things. So first one is the overview of BEC and what is changing from BEC to BAR and what all content is in part, or you can say curriculum of the BAR, and how it has been coming from old examination to new examination. So in the BAR there are 3 chapters. First one is business analysis, second one is technical accounting and reporting, and third one is local and state and local governmental accounting. So the weightage would be like 40 to 50% would be coming from business analysis, around 35 to 45% would be coming from technical accounting and reporting, and around 10 to 20% will be coming from state and local governmental accounting. So earlier there were 5 chapters in the BEC, but now it is only 3 chapters in BAR. And in terms of testing, like what all skill set that examiner would be testing you would be your analysis skill, application skill, remembering and understanding skill. So your remembering and understanding skill would be around 10 to 20%. Your application skills would be around 40 to 55%, and your analysis skill would be around 30 to 40%. So what is remembering and understanding? Remembering and understanding means how you understood the concept, right? And it will be a more straightforward question where direct question is being asked on the respective concept. So such tasks such as identifying the criteria and recalling the concept, which require an AICPA to demonstrate their comprehension on concepts and the framework and the standards. Right? These will be straightforward question which is called directly coming from the topic upfront, right? And then coming to the application skill. Application means the concept which you have understood, how to apply in the respective framework, how to apply in the respective situation. So that is called application skill set. So tasks such as that may require some calculation or determining the impact of the transaction on the business, preparation of journal entry or preparation of financial statement required by the AICPA to use accounting and business concept to measure the entity performance and measurement or recognition. So this include some amount of calculation as well to apply those concepts. Third one is the analysis. In analysis is like a case study. So where they will give you certain figures, facts, information and ask you to analyze the situation and give the response to it. So that is called analysis skill. So these are the 3 skill set would be testing in the BAR examination for you. Right? Any doubt? So far so good?
Yes, sir.
Yes. No? Okay. So now if you see in the left hand side, so business analysis, first chapter, in that we have all these topic. Second chapter is technical accounting and reporting, there we have all these chapter. And then third topic, which is state and local government accounting, these are the topics which we'll be covering. So this is taken exactly from the blueprint. So what we have done, we have mapped from the blueprint what all things are being coming in the new BAR and how it is being mapping up with the previous BEC examination, right? If you see the business analysis, this topic more or less is coming from the BEC examination of the earlier, which include financial statement analysis. In financial statement analysis, there are, like the certain fact. What is financial statement analysis? By any chance, you have idea? Anyone would like to share anything? What do you understand by financial statement analysis?
Statement is shown
Balance.
in the company at the end of the financing period in order to impress the shareholders.
Yeah. Anyone else would like to add? Have you heard the term called financial analyst by any chance?
Yes.
Yeah,
Yes.
business or business analyst. What they exactly do?
So they basically read out the financial statements of the companies, analyze them, compare the results of current year and previous year, and report their understandings to the management so that they can take fair decisions and out of those analysis conclusions.
Yeah, absolutely right. So the financial analyst or business analyst, what they do, they look at the financial statement. They do not prepare financial statement. Preparation of financial statement will be understanding in FAR. Here it is specifically called analysis of financial statement, right? So for example, if you go to the SEBI in India, SEBI website, or in US, if you go to SEC website, you'll see a lot of financial analysts report on the different industries, different companies, or different filers. Right? What exactly they do? They analyze the financial statement and compare with the industry within the organization and outside the organization, within the industry to organization or industry to competitor. So all kind of analysis they do. That may include data analytics, that may include ratio analysis, that may include budget versus actual, that may include profitability, liquidity, solvency, different performance parameter of the company. So that is called financial statement analysis, right? So that is coming directly from the BEC section, which was earlier in chapter 5, right? Second topic they have is non-financial and non-GAAP measures of performance. So when you say non-financial and non-GAAP measure, do you know what is GAAP?
Generally accepted accounting principle.
Generally accepted accounting principle. So in US, we follow US GAAP, right? So generally accepted accounting principle are those principle and framework basis which any company need to prepare their financial statement, right? That's high level. We all agree to it. Yes? No?
Yes.
Yeah, please keep responding me. Otherwise, I'll feel you are you're gone for a tea break or coffee break. Right? So the topic here is non-financial. What is non-financial information? Any idea? Any thought?
Not sure. Maybe something qualitative.
Yes. Qualitative information. For example, if there is any litigation matter, right? Related party transactions, right? Name of the related parties, right? Stock turnover ratio, debtor turnover ratio, right? So these are qualitative factors which are non-financial but important for the user of financial statement as well as for the analysis of the financial statement purpose, right? So what is the second topic which we'll be covering here is the non-financial, non-GAAP measures of performance. How these non-GAAP item can measure the financial statement. For example, ratio analysis, right? Ratio analysis is not part of GAAP, but those ratio analysis give a great insight about the company, about their liquidity, about their solvency, about their profitability, about their performance, about their position to pay to the debt, pay the interest, right? And continuity of the business, right? Make sense? Are you guys with me?
Yes, Kamal.
Yes, Kamal.
Okay. Yeah. And those non-financial and non-GAAP measure include, like non-financial, non-GAAP measure to analyze the performance, identifying and applying the internal controls, external controls, benchmarking, internal or external benchmarking, balance scorecard, or you can say interpretation of non-financial, for example, customer retention rate. Have you heard about this term called CAC? Cost of customer acquisition by any chance?
Yes.
Yeah, any of you
Yes.
like watch this Shark Tank by any chance?
Yes. From the hat, I have only heard this.
Yeah. So I'm sure in that like the people who have started watching Shark Tank might be knowing like few you can say key terms are being used for the analysis of the financial statement. So there you might have heard this term called CAC, cost of customer acquisition. What is it? At how much amount you pay to acquire a new customer, right? So those all are non-financial and non-GAAP measurements. So those we'll be studying over here. And then next topic we'll be covering is the marginal and cost accounting. Do you know what is managerial accounting? Have you heard the term called MIS?
Yes.
So what is in MIS? Like what generally like an accountant make in MIS for the management?
So MIS basically stands for Management Information System, and it's a software in which you can use the cost basis and calculate margin contribution and report it to the management. And these reports are actually MIS reports are actually helpful in for the management in taking their managerial decisions.
Mm-hmm. Yeah, very good. Anyone would like to add something? Yeah, Franci, Sloni, Surya, Abhishek. Yeah, don't leave it to 2 or 3 person. Huh? You all need to get engaged because you all need to pass your exam individually, right? 1 or 2 person in the group will not be sitting for your exam, so you have to be engaged. What is managerial accounting? What is MIS? Rachita, Abhishek, Aditi? No response?
Kamal, I'm not quite sure.
Yeah, give an attempt. No one is judging, don't worry. Yeah, Sizzle.
I think it's used by the management, like they prepare some of the reports for the internal analysis. Like they are not, issuing it for the outsiders.
Yeah, yeah. So management information system or management information reporting system, that is for internal use of management, right? So that may be, like they are trying to understand which product is giving profit or which product is not giving profit, whether they should continue any segment or they should discontinue any segment, whether they should continue producing any product or not, whether they should buy certain plant and machinery or they should not buy it. So all this information for this, all this analysis which they do internally, it comes under the managerial accounting, right? What all things comes under the managerial accounting? That is their management information system, internal reportings, and the information which help the management in taking the decision. So it can be used by using of data analytics also, and it can be using of, you can say, the market research report. It can be by using any external third party consultant research report also, that can help management in taking up the decision for the future course of action. That is called managerial accounting, right? So after completion of the CPA, so you can also choose your career in management accounting. You can also choose your career in, like assurance, audit, taxation, right? And what is cost accounting? I know you all are graduate, right? So I'm sure you all are commerce graduate. You might have studied costing. Yes, no,
Yes.
right? So what all comes under the costing? Yeah, Rachita, Surya, Saloni.
Evaluating a cost for a project and how beneficial it will be for the business, and if that cost matches the benefits that will come out of it.
Okay, that's cost benefit analysis, you mean to say?
Yeah.
Yeah. Anything else? Abhishek, Kransi, Sejal.
So it's basically analyzing what would be the purchase cost of the goods we are producing, so that we can finally decide on how much we are gonna sell it for.
Okay. Anything else?
So it helps in estimating the margin.
Yeah, very true. Very true. So costing is, like there are various method which we apply to do the costing of the product or services, right? So I'm sure you might have heard during your college day, like absorption costing, variable costing, marginal costing, activity-based costing, job order costing. Have you guys heard these terms?
Yes.
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 Right. So yeah, so we'll take you back to those college days. Then somehow you manage all this, like costing parameters. But yeah, that is also very important part for a CPA to understand how the cost has been calculated. Right. Once you understand how the cost has been calculated, then you will be in a better position to identify the margins to reach at the sales price, right? So that is also being, like other profile you can look for after the qualification in the costing department. So almost all the company, whether they are in, like product, they are in manufacturing, they are in retail, or they are in services, they all have to go through the costing process. For example, like people feel costing profile might be in a manufacturing company, right? But in the service industries also it is very important. For example, let's assume you have to develop a software, right? And you are planning to hire, like a company who can develop the software for you. How that company will do calculation of the costing and how they will reach out to the price which they will offer to you. For example, like most of you are working with EY, right? Have you seen like cost sheet which or billable hour, like the charge rate which we charge to the US,
Yes, I have seen.
right?
Yes, yes,
How
so
they have been
budgeting part.
yeah, how they have been calculated. There is cost rate on which there is a markup, and then it's a sales rate, right? That's how we do the billing. Yes, no?
Yes.
Yes, so basically there is different rate for each designation.
Yeah. And how that cost has been calculated. So they have calculated by standard costing method. Have you heard this term before? Standard costing?
Yes.
Yes.
Surya, Saloni, Rachita,
Yes.
Prachi, right? So we'll be understanding how to calculate the standard cost, right? We'll be understanding how to calculate the cost of a product by using product or service by using various methods, which may be like variable costing method, marginal costing method, activity-based costing method, job order costing method, absorption costing method, standard costing method. Those all things we'll be learning in this chapter, right? The next topic will be the prospective analysis, including use of data. So, are you guys using data analytics by any chance?
Yes.
Or you have seen like how the team are working, they are using data analytics? Can you give me thumbs up, like who all have been used data analytics, so that I can understand who all have seen? Yeah, Surya. I see 2 thumbs up. Yeah, Rachita, Saloni, you guys have not used data analytics? Sejal,
No.
Anishi,
Partially only.
okay.
Please
But
announce it after staff, please.
Sorry, say that again.
I'm saying EY allows data analytics after you are staff 3 and above.
Okay, once you reach to third year staff. Okay, got it. But like in your engagement, like you can see like how other team members or seniors are using data analytics. So like please consider this as your homework, right? Before coming to the next class, I would request each one of you to go to your engagement, check with your seniors, like how they are using data analytics. That will help you a lot in both FAR audit as well as in BAR exam. So data analytics is part of all the three examination now, right? Are you guys with me? No, sometime I have to check. Okay, so the next topic which we have is the prospective analysis, including use of data, that means data analytics. So in that, we'll be understanding budgeting, forecasting, and projections. So have you heard these terms before? Budgeting, forecasting, projections.
Yes.
Yes.
What is budgeting?
So it's like preparing a budget, how much amount of resources would be required for completing a certain task.
Yeah. Same way like you might be, like go through your engagement budget. So that is being available in your Canvas file, right? So if you go to the engagement budget, you will see like how much time for the partner is being involved, senior manager, GDS team member, on-site team member, right? And what is their costing and everything. So that is the budget for your engagement. And then I'm sure monthly your senior manager might be doing a tracking of the budget versus actual, right? And then they might be sharing the feedback with you and your team members, like how things are being moving, like how much time we have planned for the respective activity and how much time actually we have charged. Right? Have you heard these things on
Yes.
your engagement?
Yes.
Yes,
So now, like in this CPA journey, like a lot of things which you are experiencing in your journey, practical life, you'll correlate this why these things are happening, and how actually it has to be happen. Both the thing, something which may be happening, which is correct, and you will be able to correlate this theory with your experiences. But something which may not be happening appropriately, then you can go back and recommend to your team member like it has to be like this way, right? So in terms of budgeting, have you studied this budgeting in your college days topic?
Yes.
What all type of budgets you have studied? Do you remember?
Surplus, deficit,
Sorry.
surplus budget, deficit budget.
Okay. What else? Have you heard like fixed budget, flexi budget, master budget, capital budget, sales budget, purchase budget? Have you heard these terms?
Yeah, few of them.
So yeah, so we'll be studying all these things, like the flexible budget, fixed budget, or you can say master budget, purchase budget, sales budget, payroll budget, engagement budget. All those things we'll be studying in this budgeting and forecasting. Do you know what is forecasting?
So forecasting is like preparing a budget for future. It is done on the basis of current year financials.
What else? You understand by forecasting?
Estimating the cost sale.
So
We
when
can
you make
forecast on the basis of the market trends which are going on. Like the business, like the environment is dynamic, so we have to change our things accordingly.
Yeah, very true. So, like all the budgetings which you make for the future years, right? For example, like if you need to make next 5 year, you can say budget. So how do you budget for next 5 year financials? Based on certain assumptions. right? Based on the facts which is available currently, right? You'll be applying best of your understanding based on the facts available to you, and accordingly you'll take certain assumptions, and basis those assumptions you'll do the budgeting for next couple of years. So that is called forecasting and projections, right? And there are certain assumptions involved in it, and there are certain information involved in it. So you'll be understanding budgeting, forecasting, and projections in detail, right? So have you heard the profile called FP&A?
Financial planning and analysis.
Yeah, have you guys heard? Saloni, Francie, Arun?
No.
This is one of the premium, you can say, profile for a CPA in the industry called FP&A. You know, like after this class, how many of you know Naukri.com, timesjob.com, Monsters?
I
Have you
know.
guys?
Yes. Yeah.
Sure, each one of you?
Yeah.
Yeah.
Yeah. Or shall I ask for thumbs up to see who all know Naukri.com? Or now LinkedIn job portal also, right? So maybe after this class, go back and check what is FP&A profile. You know that in this class we'll not only like studying the topics only. That is not whole objective of like studying from person like me. So objective is to get the real experience of the real industrial world, and what all things you can more explore after the CPA, or when you are qualifying certain exams of the CPA. So these are the domains I'll be sharing, keep on sharing with you as we'll move forward. But FP&A is one of the finest domain for the CPA, I would say, and really high paying domain in terms of industry. So if you get any profile in FP&A, then nothing like it, because you'll be directly working with the top management of the organization, right? For example, now you are working in EY as a staff, right? Then there would be senior, then assistant manager, then manager, then senior manager, then director, and then partner, right? But if you are in FP&A profile, you'll be working directly with the partners, right? Same way, if you see in the industry segment, for example, as a fresher, we joined as a analyst, or maybe as an accountant, or as a maybe like junior auditor, right? So there would be again an hierarchy to reach to the director level people, or you can say partner level people, or you can say managing director or CEO, CFO level people, right? But if you are in FP&A profile, you'll be directly working with them. So that will take your, you can say, career path to the next level in very short time. Make sense?
Yes.
Yes.
Okay. So next is capital structure. You know what is capital structure? How many of you have done BCom honors, Delhi University, by any chance?
Unfortunately, me.
Anyone else?
Yes.
Okay, so I'm sure you might be knowing capital structure. It was like struggling area in third year of your BCom honors.
Yeah, a lot of things. Net present, cost of capital,
Yeah,
discount factors.
yeah, yeah. So capital structure, like when you think of capital structure, what comes in your mind? What all things will be giving funding or financing to the organization is part of capital structure. So capital structure may include your equity, may include your preference share, may include your debenture, may include your borrowings, right? So I'm hoping you will be knowing what is equity. Yes, no?
Yes.
Yes.
What is preference share?
इक्विटी का छोटा भाई वोटिंग राइट नहीं मिलता
Yeah, yeah. Anyone else would like to give explanation? What is preference here?
Like they are given preference over the like at the time of the payment, they are given preference over the debentures and other borrowings and all.
No.
No,
No, they're given preference over equity.
Yeah.
payment of
Yeah.
dividend.
Okay, okay.
Share,
Voting
yeah.
right.
Yeah, Rachita, you are saying something?
Yeah, same comment that they are given preference over equity shareholders.
Do they have dividend
While
fixed or
dividend
not? Do they have fixed dividend or not?
no, I don't think. I don't think so.
I'll take you back to the college days. Somehow we manage college. Now Kamal sir is taking back to the college days. Yeah, no worries. You have to go back. So yeah, preference share, there are two type of preference share. One is, you can say, convertible preference share. Other is non-convertible preference share. And within that also there are two breed, I would say. One which have cumulative dividend, right? And another which do not have cumulative dividend, right? But they all have dividend, right? Have you heard about debentures? What is the characteristics of debenture? They are bearing interest, right?
Right.
And borrowings is again same like a debenture, but that's called debt or maybe financing from bank or any financial institution, right? So composition of all of them will make your capital structure. But as a CPA, when you are working in an organization, what you need to you can say provide a solution to the management and company, how your overall capital cost would be minimized, can be minimized, right? So how much amount of equity you should have, how much amount of debt you should have, how much amount of preference share you have, so that your capital structure is balanced and you have minimum cost of capital, right? So we'll be understanding that also in detail about the capital structure. Next topic is investment alternative using financial valuation decision model. I am not sure you have heard this term, investment alternative. Have you heard this term before?
No,
No.
sir.
Yes, during graduation only.
So
So
yeah,
it's like while in this subject we actually studied while deciding investment option, like in which instrument we should invest, and comparing the cost and benefit analysis of all the instruments.
yeah. Anyone else would like to add? Saloni, Surya, Rachita, you guys would like to add anything? Abhishek, Arya, are you guys here? We have just started.
Yes.
Okay, yeah, investment alternative are like different ways of making investment, and what all things you should be considering when you are evaluating the different proposal for the investment, like at how much time you'll get the payback, what is your net present value, what is the economic value, what is the cash flow, what is the discounted cash flow, what is the internal rate of returns you'll be getting out of it, right? So I'm sure in costing you might have studied this topic in your graduation, but we'll be doing again a reiteration of the same. Right. Next topic is the risk management. Have you heard this term? At least in EY you might be hearing this time and again. Risk management.
Yes, sir.
Right? What do you understand by risk management?
So basically, while we are performing the walkthroughs of different audit clients, we go through their entire IRPR process, and we identify risk in those process, and then to mitigate those risks, some controls are being placed. So this is
What is the full form of IRPR?
so it's IRPR is initiation, recording, processing, and reporting. So how the transaction is initiated in the accounting system, and then how the system reports it, then how is the transaction process, and finally how it is being recorded in the financial statements.
Yeah, everyone agree? Yes.
Yes,
Yes, yeah.
Okay. So in this, Jatin, you went a level ahead. risk assessment is being done before this, right? So the risk assessment mean identifying the like when we will be discussing in context of company. So when we are discussing in context of company from the management point of view, I need to identify the risk to my business, right? So from the management side, they do risk assessment for their business. So what can go wrong for their business if anything is happening or if anything is not happening? That is called risk assessment from the business standpoint of view. But when it comes to audit side, when we do risk assessment, what we do, we take all their business risk and identify what are my audit risk. There may be possibility there are 1,000 type of business risks, but out of those 1,000, maybe like 600 may not be impacting my audit, right? So I should not be worried about it. So I should be worried about remaining 400 risks which is impacting my audit. So when I say impacting my audit, they are impacting your financial statement or internal controls. Make sense?
Yes.
Right.
Yes.
So now coming to the risk assessment, there's a beautiful topic in this is called COSO. Have you heard about this term?
Yes.
Surya, Arya, Sejal? No?
No.
Okay, just make a note. Today, go back to your audit file and check for COSO framework. This is very important and heavily tested in your exam, both in audit exam as well as in your bar exam. So this topic is in both places, in your audit as well as in bar. Right? We'll be discussing in detail. This have like around, you can say 5, you can say concept and 17 principle in the COSO framework that we'll be discussing in detail when we come to the risk management. Right. Next topic would be economic and market influence on the business. So, like when you do the business, there are so many things which are not in your control, right? So that can be, like change in interest rate. For example, bank has changed interest rate. RBI has changed any interest rate. So that is not in your control. You cannot control that, right? Second is inflation or deflation. That's not in your control. You cannot control this, right? So, for example, change in foreign currency prices. That is also beyond your control, right? Or maybe you can say demand and supply of the product. That is also may not be in your hand, right? So those external factors on which you do not have any control, right? What are those factors? How they influence your businesses and how you need to be careful on mitigating those kind of risks. So that we'll be studying in the economic and market influence on the business. So these all topics were earlier there in BEC. Most of them were in chapter 1, 2, 3, and 5, right? So these all area would be coming from BEC to BAR, right, Jatin?
Yes.
But the chapter 2 and chapter 3 is coming directly from FAR. So, Jatin, have you taken FAR classes?
No.
No. Okay. So, any of you have taken FAR classes? I think all of you are new students, right? Okay.
Yes.
Yeah, none of you.
Not taking.
Yeah, you guys are not in FAR class. Okay. So in FAR, earlier, all these topics were covered in FAR. Now they have been moved to BAR. So first one is indefinite live intangible assets, including goodwill. So there are certain assets for which it's difficult to define their life, right? That is called indefinite live intangible asset. For example, brand name, copyright, patent, right? Or you can say trademark. So it's difficult, like how much year they will give you the benefit, right? Make sense? Yes? No?
Yes.
Right? Or goodwill. So But at the same time, like what you need to do, you need to do fair value assessment at each financial year end and do the impairment analysis and book the impairment loss if there is any loss on those respective intangible assets. Make sense? What you need to do? Every year you need to do impairment assessment. If there is any loss, then you need to book that loss in your accounting. Make sense?
Yes.
Second is internally developed software. So that means, for example, you have your internal teams, your tech team, and you are developing any software. Whether you can capitalize that software or you have to expense off, right? The accounting treatment of the respective category of the software which you have developed, whether you can capitalize that or whether you have to expense off. There are certain rules according to the GAAP. So that you need to follow. We'll be discussing that in the internally developed software. Next topic is revenue recognition. Have you heard this 5-step model of revenue recognition?
Yes, under ASC 606.
ASC 606, exactly. Yeah. Arya, Saloni, Surya. Have you guys heard ASC 606?
No.
Okay.
Okay.
Okay. So this is again a small homework. So now go back to your audit files, right? There see ASC 606 memo. There might be an ASC 606 memo. So I would request to go through that. You will get an understanding what ASC 606 is all about. But no worries, we'll be studying in detail complete 5-step model of ASC 606, which is called revenue recognition. So ASC 606 has came effective from December 2018, right? For the public company, it was like you can say recommendatory to take the effect from December 2017, but from 2018 it was mandatory implementation, right? So we'll be understanding that all the 5-step model in revenue recognition. Step 1 is identification of the contract, whether any transaction which you and your customer has made was a valid contract or not. So identification of contract is the very first step. Second step is identification of performance obligation. The contract which you have identified, what all is your performance obligation in that contract, right? So that is step 2, identification of performance obligation. Third step was the transaction price. What is the overall price of the contract and what is the price for the respective performance obligation? That is fourth step, allocation of transaction price to the respective performance obligation which you have identified in step 2. And the last step is the revenue recognition. And then there are certain exceptions to the general rule that also will be understanding, which is called installment sale, franchisee revenue, right? So those kind of specific topic also will be discussing, and then software cost and other things we'll be discussing, right? Next is stock compensation. Have you heard this term called stock compensation?
Yes.
Yes.
What is that?
So basically, when companies enter in an agreement with their employees, that's some part of their compensation would be paid out in the form of shares, like RSUs, restricted stock units, and there are other stock units as well that are given to employees, like after completion of certain term with the company.
Yeah. Anyone else would like to add something? Abhishek, Sejal, Francie, Rachita, Aditi. Are you guys here?
Yes, come on.
Anything you would like to add?
So these are basically the share options that are allocated to the employees after, So
yeah, stock compensation can be to employee or it can be to the vendor also, right? So when you give the stock compensation to employee, we call it employee stock option plan or employee stock compensation plan or stock based compensation to employee. But it can be to vendor also, right? For example, like like this is, you might not have heard very much in context of Indian company, but in US it is very common. And now, as the startup culture is growing in India, so this stock compensation to the vendor is also growing. For example, let's say we have an edtech company, right? And we have involved a technology solution providing company to build the digital learning platform, right? To them, rather than paying in cash, I can pay through the stock as well. So that is called stock compensation to the vendor, right? Employee stock option plan, you all might have heard in your college days also, that if employee is working in your organization, to compensate some part of it, you'll be giving the stock compensation plan to them so that you can retain high talented manpower. So this is generally for the leadership roles, right? Make sense? So we'll be discussing in detail about the accounting of stock compensation plan to both to employee as well as to the vendor. Right? Next topic is research and development cost. Do you have any idea what is research and development cost?
Yes.
What is that?
So this is basically very common in new startup companies, where for the initial some months they are just doing research and not making any revenue. So the cost incurred in doing the researches, paying to the scientists or maybe the engineers, depending on the nature of the company, those are all classified as R&D costs.
Yeah, Saloni, Abhishek, Surya.
I think in this we can also include if the company is trying to introduce any new product or any service. So before that they have to go for the research and development.
Yeah.
Pharmaceutical companies and all, where to develop a product they have to incur certain R&D costs.
Yeah. So yeah, most of you are absolutely right. Like nowadays, like from startup to all the big company, they have like separate wing, which is called research and development wing. For example, let's say, if you see an example of Tesla, right? If you see an example of BMW, if you see an example of Hyundai, right? Every year they are coming up with their new model, with a new variant, with a new innovation, right? You might have seen like earlier there were petrol car, then diesel car. Now they come up with the electric vehicles, and now like future of the vehicle would be driverless cars, right? So they keep on investing good amount of time and energy in developing new and new product, and for that they keep on doing the research. When we hear the word called research and development, most of the time it hits in our mind is pharmaceutical company, or you can say healthcare industry, but it's in almost all industry. You see like Google, like every year they are coming up with so many new features, right? So initially they come up with the search engine, then they implemented AI enabled, right? Then after they have come up with a new product called YouTube. Then after they come up with the cloud solution. Then after they come up with the Google Drive. Then after they come up with the WebEx, right? So they are keep on investing huge amount in research and development, right? Make sense?
Yes, come.
Right? So we need to broaden our horizon when we think about any particular concept. So that's the whole objective of like in the classes I try to help you out to broaden your spectrum to look at the things from the different angle. So when it comes to research and development costs, there are two parts of it. One part is the cost which you are investing on research, right? Second part is the development cost. So the research cost and development cost, for example, any R&D center, what all expensive will be there in R&D center?
Paying the salaries of the employees.
Yeah, you may have infrastructure, you have certain computers, you have certain machineries, you have certain equipments, you have certain, you can say, products, you have furniture, fixture, you have employee, you might be paying salary, there would be air condition, or there would be other electrical item for which you might be paying rent, right? Holistically, if you see, the research and development center is like an office where people do go and do the experiment for the respective product, right? So there would be fixed cost, there would be some variable cost, right?
Right.
Yes or no?
Yes, sir.
Right? So the
Yes.
fixed asset for which there is an alternative use available, those fixed assets you can capitalize, but the fixed asset which do not have any alternative use, you won't be capitalizing it. So we'll be understanding more in detail. Second thing is research cost and development cost. All the research cost is always expense of. And development cost you can capitalize only if the research is being having a feasibility established, that in future economic benefit will be received, which is more than 12 months. Then only development cost you can capitalize. Other than that, all the expenses need to be expense of. Right? So we'll be discussing in detail. I'm just giving you high level overview. So today class objective is to give you high level overview what we are going to study in next 10 to 12 weeks. Right? Don't feel overwhelmed. Right? That in one class we are going through all, but one class we are not going through all. One class, in this class, I'm just giving you the complete overview so that you'll be sensitive about what is coming in your way for next 10 to 12 weeks. Right? Got it? What is research and development cost will be?
Yes.
Okay. Next topic is the business combination. Have you heard this term? Business combination?
Yes.
What is business combination? What is business combination? Yeah. What happened? Why so silent? Do you want any break?
Just trying to frame it in words.
Okay, let me know if you want any break for 10-15 minutes. But I want you to be continuously engaged.
We can actually relate it to that mathematical concept of permutation and combination, where the management is actually like planning out the things which business.
No, you are absolutely wrong. Don't attempt. You're going in a wrong direction. What is business combination? Have you guys heard this term in your college day by any chance?
Yes, yes.
So what was the topics you might have studied in business combination?
I think it included like the merger or the acquisition of some of the businesses or something like that. I'm not quite sure.
Mm-hmm.
When a company basically obtains control over another entity and transfers its assets and liabilities.
Mm-hmm. Yeah, so business combination happen when there is an acquisition, there's a merger, there's a combination of two entities and coming up with a new entity. So that is called business combination. Majorly nowadays we have seen a lot of merger and acquisition. Do you know what is the name of company Google? Do you know the name of company of Google?
Alphabet.
Alphabet INC.
Alphabet, right?
And that's the parent company. Yeah.
The parent company. Can you imagine how many acquisition Google make in a year?
Last time I audited, it was around 60 to 80 in a year.
Anyone else can make a guess? This is not exact number, but yeah, anyone else can make a guess?
Hundreds.
Yeah, so around 100 to 110 acquisition they make in a year. That means every second day they are doing an acquisition. Right? Maybe like if you see, you might have heard about a company called Byju's.
Yes, a lot.
Yeah, you got it. So in last 3 years, they have also done like more than 25 acquisitions.
But I feel now they will themselves be acquired.
Yeah, that's another theory, but now if you see, it's very much prevalent. Yeah, during the COVID time also there were a lot of mergers and acquisition does happen because the company who are shutting down, so many of the major players have acquired them at really low cost. Right, all those things comes under the business combination transaction. So here we'll be understanding in detail what is acquisition, what is merger, what is purchase of a company, what is combination of the two companies. So those things we'll be understanding in this concept, right? The next concept we'll be understanding is a consolidated financial statement. Have you heard this term before? Consolidated financial statement.
Yes.
Yes.
What is that?
So when we are when there is any company which has multiple subsidiaries in different geographies, so there is a consolidation process where the results of all the subsidiaries are merged into the results of the main parent company.
Yeah. Anything else? Anyone else would like to add? Saloni, Sejal, Franshi, Surya, Tachita, Aditi. I see 2 or 3 people are just sharing their thought. Why you guys are not engaging? You are not liking so far?
Sir, if you allow, can I just give an advice to everybody? So guys, please be comfortable. Like I can share you from my experience that no one judges you over here.
Yeah, it's completely no judgmental zone. I'm not your manager who will be giving you any rating based on your response in class. It is for beneficial of you guys only. Yeah? If you interact, if you respond, it clarifies not only your doubts, but it helps in clarifying other people's doubt also. And no doubt is, like the silly doubt. You never know, you might be thinking it may be a silly question, but that question may be in the mind of, like most of you. So you'll be the first one who is, taking up the things. And here, no one is like same way like Jatin says, no one is judging you for sure.
And secondly, when you are actively participating and speaking some things out, you are most likely to retain that in your mind.
Yeah, that's also a good point. When you speak, yeah, it definitely help in retaining in long term also. Okay, so coming back to derivative and hedge accounting. Oh, okay. So consolidation. So consolidation is basically when one company do have, like a different investment, right? So it can be subsidiary, it can be joint venture, it can be equity investment, or it can be other investment, right? So for equity investment, for joint venture, for subsidiary, so it is being required to make a consolidated financial statement for their respective share and identifying the amount which is being non-controlling interest, right? In your graduation, I'm sure you might have studied consolidated financial statement. Have you guys studied this topic in your graduation?
Yes.
Yes.
So in consolidation of financial statement, you might be seeing there are 2 or 3 or 4 companies for which financial statement you are consolidating and making one consolidated financial statement. And you might be identifying how much is your share and how much is the non-controlling interest. Right? Do you remember the concept of non-controlling interest or minority interest? Have you heard this term?
Yes.
No, Kamal.
No.
Yeah. So Arun, what is non-controlling interest? If you can share for the benefit of everyone.
I haven't heard that term.
Yeah. So very simple, just for benefit of everyone. Maybe I can make a small example for you guys. So let's assume this is A Limited. This have B, C, and D. So A company have, let's say, 100% share in B. They have 60% share in C, and they have 50% share in D. And now let's assume they have assets. They have $100,000 assets. Let's assume they have $1 million asset. They have, let's say, $500,000 asset, and they have, let's say, $200,000 asset, and they have $100,000 assets, right? And let's assume they have liabilities of, let's say, $800,000, and they have, let's say, $400,000. They have $150,000, and they have, let's say, $70,000, right? And this is the equity. So what will be the equity? This minus this, right? Then only your balance sheet will tie. Now I'm not going to all current assets, non-current assets, just high level for your understanding purpose, right? Now you need to make a consolidated financial statement of A Limited, right? So what will be the consolidated financial statement of A Limited? So here you say this will be equal to sum of the assets, sum of the liabilities, and then what is the equity they have? Their own equity. Right? Now, if you see there is a difference, what is that difference? The difference is non-controlling interest. This will be the assets, liability, and equity, right, in the consolidated financial statement. And whatever is the difference over here is being part of your non-controlling interest. Make sense?
Yes, Kamal.
Right? So this is called non-controlling interest, which is not the company ownership. Right? We'll be discussing in detail, don't worry, we'll go through details, examples, and many illustrations together when we jump into this consolidated financial statement topic. Right? Next is derivative and hedge accounting. So derivative and hedge accounting, have you heard this term before?
I heard about hedge accounting, but not sure derivative.
Anyone else?
Yeah, like future forward.
This is there to mitigate risks, maybe, where companies hedge their risks.
Yeah. So there are two concepts. One is derivative, and the second concept is hedging. So derivative are basically instrument. So that maybe you can say the financial instrument, which is like stock options, rights options, put options, call options, right? In that there are certain risks involved in it. So the risk could be credit risk, risk could be cash flow risk could be interest rate risk changing. So those risks can be mitigated by hedging, right? That is called hedge accounting for the derivative. So this we will be discussing. This is altogether new concept you might not be exposed to in your graduation, but this is something new you will be learning in the second chapter. The next is leases. Have you heard this term before? Lease accounting?
Yes.
Yes.
What is leases? There are two type of lease, three type of lease. I'm
Operating.
sure in college day you might have heard lessee, lesser. Do you know?
Yes,
What
Captain.
is lessee? What is lesser?
The lessor is one who is actually giving their asset on the rent, and lessee is the one who is getting the right of use for those assets.
Yeah, and in your college day you might have studied operating lease and finance lease, right? But in US GAAP it's very different. So there are different category of lease in the books of lessee and different category of lease in the book of lessor. So this concept is new concept. Have you heard the term called ASC 842?
Yes.
Accounting Standard Codification 842. I know one or two might have heard this term, but all of you now, another small homework for you, just note it down. Go back to your audit file and search for ASC 842 memo. Right? There you will get an understanding how it is being applied in your respective engagement. So then you can correlate the theory which we'll be studying in the lease accounting with your practical experience in your engagement. Right? Abhishek, Surya, Arun, lot of homework.
We'll do that, Captain.
And the whole objective is what you are studying over here, you can correlate with your engagement, with your experiences, right? Then it will be easy for you to retain for the exam purpose, right? And then public company reporting topic. Have you heard 10K?
Yes.
What is that?
Annual filing for issuers.
Yeah. What is that?
It's annual filing for the issuers.
Annual filing of issuers to SEC. Have you heard the term SEC? Everyone?
Yeah.
Yes.
Yes.
What is that?
Securities and Exchange Commission.
Security?
Exchange Commission.
Exchange Commission, right? Like, have you heard the term SEBI in India?
Yes.
Yes.
Yeah. Similar to that in US, it is called SEC, Security Exchange Commission. Have you heard the term called PCAOB?
Yes.
Yes.
Yeah, Public Company Accounting Oversight Board, right? And AICPA, I'm sure you all are aware of.
Yes.
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 Yeah. So another form is 8K. Have you heard this term? Form 8K?
Yes.
What is that?
Special events filing.
Yeah, so filing of special event with the Security Exchange Commission, that form need to be filed in 8K. So what are the special event? Like if your company is doing any acquisition, any merger, any change in leadership, right? So any new director is joining, any you can say major shareholders are joining, or any major shareholder are going out, any major director is going out, managing director is moving. So any major transaction or any, you can say, planning for any discontinuing of any operation. So all those things need to be disclosed in form 8K to Security Exchange Commission, right? And have you heard of 10Q?
Quarter filing.
Quarterly filing. So how many of you are working on listed engagement?
I have worked.
Yeah. How about others? Saloni, Sejal,
Yeah,
Abhishek.
myself working on
Yes.
listed
Which
engagement.
client you are working?
Deutsche Bank.
Deutsche Bank. That is UK based. And any US client you guys are working?
Yes.
Which one?
Loma Linda University and Alpine Immune Sciences and other are also there.
Any SEC listed client you guys are working?
Saloni, just be ready to do all the extra governmental learnings.
Sorry?
Loma Linda सरकारी client है ना, extra learnings करनी पड़ेंगी.
Yeah, right. Coming
Yeah.
in August.
Surya, yeah, Franchi, Surya, Sejal.
Yeah,
Are you guys?
I was working on assembly biosciences.
How
That's
does
US client.
is it SEC listed?
I'm not sure about that.
What is the name? Can you just tell me spelling?
Assembly biosciences. Assembly. Yeah. Yeah.
Yeah. So this is a listed client. For any of your listed client, you can go to the investor cell. There you will see like press release, event, corporate governance, financial and filing. If you go here, financial filing, so we'll see their reports. So their annual filing 2022. So I would say the client in which you are working, just download their annual filing report. Right? This is their annual filing report, which they have submitted. Right? And go through their annual filing report. It will help you in your audit examination, in your BAR examination, and in your FAR examination. And more importantly, it will help you better understand the client in which you are working. So this is 10K. Can you see this? Form 10K. Right,
Yeah.
Sajid?
Yeah.
Have you seen like this one before?
Yeah.
Right. Yeah. Please tell me what you're saying.
Yeah, we do the tick marks and tires from other work papers.
Yeah. So now it's a time to read it. Right? Now you are going to become a CPA. So CPA should be aware of each and every item written in 10K. Right? So this is homework for you, Sejal. You need to read through this 10K before coming to next class. And same way, like I can download this one and share with each one of you. So I humble request, at least go through any one company of your client 10K. Right? That will give you the complete picture of the overall financial statement. If you see here, they will give you the detail of business risk factor, which we were discussing, business risk, right? And other legal proceeding, mining safety, all these things over here. And then if you see, this is very important, management discussion analysis and financial condition. Then after finally, financial statement and supplementary data. So this financial statement and supplementary data will give you the complete financial statement details. Right? So just download any one company financial statement 10K and go through that. It will definitely help you in all the 3 exams. Your audit exam, your bar exam, as well as your FAR exam. Right? So the public company reporting topics, these all we'll be discussing in detail. Your 10K, 10Q, 8K, all these forms which is required to be filed with the SEC. The next topic would be financial statement of employee benefit plan. Have you heard 401k plans?
Yes.
Anyone else? Krishna, Surya, Arya?
No.
No? Okay, so this is a question to your senior for Monday, right? Ask your senior, show me 401k plan, right? So in next class, when you're coming, you should have some idea about 401k plan. But I'll give you a high-level overview. That's employee benefit plan, right? So in India, maybe when you are studying your graduation, you might have studied Accounting Standard 15 called employee benefits. By any chance, you might have studied that? Have you heard this term, employee benefits?
Yes.
right? So employee benefits are two type of benefit: pre-employment benefit and post-employment benefit. Yes.
Yes.
Right. And then again, short-term benefit and long-term benefits. So short-term benefit, like you are getting the salaries, right? Long-term benefits are your pension schemes or your leave encashment, your gratuity, right? Your defined benefits plans, right? Those all things comes under the long-term benefit. Make sense?
Yes,
or no? Right? So those long-term benefits, long-term employee benefits, sometimes company do maintain and manage in their own, you can say trust, or sometimes they give it to the third party, generally to the insurance company to manage and maintain. Right? When the company manage and maintain at their own, it is called defined benefit plans. When they give to third party like insurance company, banking or financial institution, that is called defined contribution plan. So in the defined contribution plan, company has an obligation to pay their part of contribution. So you are paying your part of contribution as employee, and company also pay their part of contribution and submit to the insurance company, financial institution or bank, and they manage and maintain the defined benefit requirement for the long-term perspective for employees. On the other side, company can have their own trust, right? And that can manage and maintain the long-term employee benefit, in which employee contribution will be submitting, employer contribution will be submitting, but they need to make sure they will be investing the amount in appropriate, you can say, securities to earn the sufficient money to give you the sufficient payback in the employee benefit plans. Right? In that case of scenario, they have to get those trust audited, and those trust audit comes under the financial statement employee benefit plans. Make sense? Or very difficult? Very complex?
इतना तो इनके सीनियर भी नहीं बता पाएंगे.
Yeah, Franchi, Abhishek, Surya. Shall I simplify in an Excel sheet? Or you got it?
Got it.
Okay, so then after last topic, which is state and governmental accounting, right? In that, we'll be understanding format and content of financial data. So the financial statement, which is like 10K, 10Q, which you are making for the for-profit organization, which is SEC listed client, and AICPA accounting standard framework, which is GAAP framework for the non-listed company you are making. But here it is completely different. You'll be making state and governmental accounting based on the GAAP issued by the government. Right? There's one more quick concept before you get over here, is understanding of how the standards are being made. So 1 second, I'll show you. Today, I'll walk you through how the accounting standard has been made in US. Are you guys ready?
Yes.
Yes, sir.
Yes.
Okay. Okay. This is part of my special training which I give to company. Introduction to US GAAP. So here we'll be understanding who is the governing body who make the GAPs basically, and then how the ASCs are being